Welcome to the Flip Nerd VIP Investor Show. Today I'm joined by Jillian Sidoti, who wears lots of hats, like a lot of folks that I've had on the show so far. Before we get started here talking to Jillian and meeting her and learning some things about raising money and a lot of other things she's working on, let's take just a second to recognize our sponsors. RealtyMogul.com is an online marketplace for real estate investing, connecting borrowers and capital from accredited and institutional investors. Get a rehab loan fast and close in as little as 10 days. Rates start as low as 9%. We'd also like to thank National Real Estate Insurance Group, the nation's leading provider of insurance to the residential real estate investor market. From individual properties to large-scale investors, National Real Estate Insurance Group is ready to serve you. Please note, the views and opinions expressed by the individuals in this program do not necessarily reflect those of FlipNerd.com or any of its partners, advertisers, or affiliates. Please consult professionals before making any investment or tax decisions, as real estate investing can be risky. So Jillian, welcome to the show.
Thank you so much for having me, Mike. I really appreciate you having me.
Awesome. Well, Happy New Year. We're getting the year started here.
You too.
I assume you're looking forward to an exciting 2014 ahead?
I definitely am, because actually, as of January 1st, my firm, the law office of Jillian Sidoti, actually merged with another firm, Trowbridge and Taylor. So we're hoping we're going to be able to expand services and really provide more to those people out there who are trying to raise money for their entrepreneurial pursuits or their real estate projects.
Awesome. Well, I've sat in on some training that you've done. I know we run in some of the same circles with friends. I know that you're an attorney. I think you're an astronaut. Your husband's in a rock band, right?
That's right.
I know you're an investor. You're a strong woman that wears a lot of hats. So why don't you introduce yourself and tell us a little bit more about you?
Thanks. I am. Yeah. Well, actually, I started in this particular line of law because I was a real estate investor. Previous to that, I was running a record label, and we were incredibly undercapitalized. We didn't have any money. So I ended up going back to law school. And when I was in law school, I knew that I wasn't going to be a traditional lawyer. I kind of went to law school for something to do. And so in the middle of law school, I started getting into real estate investing. And as I was doing it, I realized, you need money to do this. You need money to build any business. You need to start with some kind of foundation of money. You can scrimp and save, but it's always easier if you can leverage with cash. Yeah. So I started looking into that. And actually, the firm that I just merged with, Gene Trowbridge, who's the founding partner of our firm now, he kind of mentored me and showed me, you can use investor money, but you have to do it in a very specific manner. There are laws and rules that you have to follow.
Right.
And so once the bottom fell out here in Southern California in the real estate market, we were doing condo conversions, taking apartment buildings and converting them into condominiums. And basically we were flipping apartment buildings.
Yeah.
Once that market kind of fell out in around 2006, 2007, that's when I started my firm, and I started helping other real estate investors with financing their deals with private money.
Okay. I got to say something. When you said you started a record label, I mean, putting something like that on your resume, it makes you sound really cool. So, but I got to tell you a story. One time, this was like 5 years ago, I did a Google whatever it's called, alert, where you can type in a keyword. If this ever pops up, alert me. Well, I found out immediately that there's another Mike Hambright in the United States who's in a rock band, and he was a lot cooler than me. So I kept getting all these things of how cool Mike Hambright was, but it was the wrong Mike Hambright. So I had to kill that alert. And so anyway, that sounds awesome.
That's good stuff.
Yeah. And so you actively invest in real estate yourself as well now, right?
I do. I'm a very passive investor at this point in time. So I'm not in the trenches with a lot of you folks who are out there listening to this. And the reason for that is because I have a law firm, and I also have 2 small children.
Yeah.
So it makes it difficult. So I'm to go out to properties and scope properties. So I'm much more passive. I have a group of people around the country that I invest with. I own a couple of notes second notes on properties out in Ohio. I'm a partner in an apartment building in Kansas City, and I also have done a bunch of single family flips here in Southern California with a couple of select flippers out here.
Yeah.
And that's actually been the most lucrative.
Yeah.
Is the flipping for sure.
Yeah. Over the past year or two, you're saying, or even before that?
I've been flipping. Well, the single family flips I've been doing probably for the last 2-3 years.
Yeah.
Just all over, from anywhere from, I did one all the way up north in Santa Barbara. Well, that's north to me, Santa Barbara down to San Diego. So,
okay.
Yeah.
So before we talk more about the law stuff, what do you think is going to happen in California real estate over the next year or two? You think there's some people that think it's never going to end. There's some people that know better than to make a comment like that.
I'm going to tell you right now, there's something going on because and I have a little bit of anxiety about it in a lot of ways. And my anxiety might be a little different than other people's anxiety. Where I live in a place called Temecula. And I actually live out on the outskirts of Temecula in a place called Winchester. And I moved out here because there was nothing out here. And I liked that. And now, and they were supposed to I moved out here in 2008-ish. And they were supposed to build like a Home Depot and a Lowe's and a Target and all this stuff out here, and they never built it. It's just like empty lots with construction material like sitting there.
Yeah.
There's all kinds of things that were supposed to be built. It never built. Anyhow, since probably summer of this year, it's actually very frustrating to me because there is tons of new development. It's like 2004 all over again. Yeah. At KB Homes, Party Homes, DR Horton, all of the big developers are out here building massive neighborhoods. Yeah. And the density is incredible. Now, the reason why it gives me anxiety is because the density is huge. And I don't think the roadways are going to be able to handle the density. In other words, we're going to have traffic, and I'm not happy about that. Yeah. And that's a personal thing that has nothing to do with the economy and flipping. Right. Second, we don't have the commercial infrastructure to support it. I mean, at my end of town, we have like one grocery store, and that place must be making a cool $1 per week because there's just no way people are traveling very far to go get groceries. With that being said, obviously these developers know something. Yeah. They know something we don't know, because they wouldn't all magically start up this massive construction without knowing something that we don't know. Yeah.
They tend to usually be late to the party on both ends of the booms and busts though. So yeah, who knows?
Who knows? I don't know. It's just, it's crazy how quickly and how much these houses are going up. And Mike, actually, where are you guys located? You're in the DC area?
Dallas-Fort Worth.
Dallas-Fort Worth, sorry. Yeah. So I don't know what it's like out there. But, well, actually, I know a little bit. The houses are not nearly as close together as they are here. And so the houses are like crazy close together, and there's tons of them all in one little concentrated area. Yeah. If you ever see the beginning of that show, Weeds, and it's little houses on a hillside, that is exactly where I live. Yeah.
All right. So tell us a little bit about, I know you kind of specialize in helping investors raise money. Is that right?
Yeah, that's exactly what we do. So, I have a bunch of, and another way to speak to the economy and the way the housing market is going, I have a bunch of single family flippers all over the country, really, but right here in Southern California who raise money, who have private placement memorandums, who have funds, and or they do the one investor per property model. And so they're raising money that way, and they are now, we're seeing them starting to run out of deals. Yeah. We're going through a little boom right now, and so they're starting to run out of deals. And when that happens, usually it's almost the perfect storm of everything you don't want to happen, which is people start they start getting back interested in the market. They're not scared anymore.
Yeah.
So now there's an abundance of investor money. So all of you out there that think you can't get investor money, that is completely wrong.
Yeah.
I did the math on it. If you invested like $10,000 in, say, Apple stock around 2008, it would have been $70 a share. And so if you waited around for it to reach its peak, you may have made up to $100,000. So that's a $90,000 profit. Very, very nice profit if you went to the peak in, I think it was 2011, 2012. But if you instead took that money and put it into flips and kept flipping and flipping and flipping, you would have made exponentially more money. Because, and the reason being is because Apple doesn't pay dividends. So you never had any kind of reinvestment of that gain. You would have to buy and sell and buy and sell and buy and sell over and over and over again in order to realize any traction.
Yeah.
So,
So let's talk about, tell me a little bit about what, having heard you speak before, I know that you certainly are a believer, and I'm sure you're right, that most investors that are trying to raise money are probably doing something illegal or at least wrong, or doing it in the wrong way. And I see people all the time, spouting off on social media platforms that I'm looking to raise this much money and you're guaranteed this much return and stuff like that, which is obviously a big no-no.
Right.
And everybody thinks, well, nobody's going to come after me because I'm just a little guy. But talk a little bit about, I guess, maybe what most people do wrong. And then after that, we're going to talk a little bit about how to do it right.
The biggest thing is that people put things on their web, just like you said, people put things on their website or their social media that says, I'm looking for investors. I'm guaranteeing something. It's safe, secure, low risk. Right. Words like that, safe, secure, low risk guarantees, those should never be used, period. And second of all, you should never be asking anybody for money on any social media or website type platform. And for those of you who think you're too small for the SEC to care, you're wrong. The SEC's bored. And they're looking for you. And they think, like they all have these weird fantasies that you're the next Bernie Madoff and you're just like a sleeper cell or something and they're going to get you and they're going to crack this case wide open. Or even worse, that you're low hanging fruit. You don't have the money for an attorney and you can put a W in their column, their litigation column. So I would be very cautious when you think that you're too small for them to care. That is absolutely not the truth at all.
Right. And for the folks that think that in order to do this right, I have to hire an expensive attorney, spend a ton of money, do a bunch of stuff that I don't quite understand. I mean, there's some simple ways to raise friend and family money without having to go through the SEC. Can you talk about kind of the closer to the vest friend and family type deals or people that without doing anything publicly?
Well, okay, that's a great question. The thing is, there is no such exemption as a friends and family exemption. Now, that's a big misconception that if you just use money from your friends and your family, then you don't have to follow any rules. That's absolutely not the truth. I'm
not saying not follow rules, but there's some distinction between making a public solicitation and working through people that you know. Is that right? Or maybe I'm the low-hanging fruit here.
Well, no. Let's talk about how you can deal if you're a smaller investor or you're just starting out and you just need a couple of investors on one deal or a couple of deals, whatever it might be. I'm gonna tell you how to get around spending a lot of money on an attorney and getting it done. Now, I'm going to tell you right now, anytime you're taking somebody else's money, whether it be your best friend or whomever it might be, you need to hire an attorney to make sure that they properly protect you and disclose all the things that your investors need to know. Because the number one thing that's going to come up if something goes wrong is that, well, you didn't tell me that.
Right.
So that's a huge, huge, huge thing. So if you're a smaller investor and you have, say, your first flip and you want to get money in the door for that first flip, and perhaps you want to offer your investors a note and you want to do the one note per investor and it's secured by a deed of trust. What you should be doing is still calling an attorney, making sure an attorney drafts that promissory note and makes the terms and conditions very clear, but not just the promissory note, but also gives them a disclosure document that says, here's exactly what you're getting into. Now, I'm not talking about a full-blown private placement memorandum. I'm talking about something that says, look, I'm an investor. I know what I'm doing. I'm getting into this. I know the risks involved here. And the company, you being the company or the issuer, saying, here are all the risks. This is what you're getting into.
Right.
Sign off that you understand this.
Yeah. Yeah. Okay. And for folks that are looking to raise larger sums of money that, clearly need an attorney more than anyone else. Mm-hmm. Talk a little bit about, some of the pros and cons, or the good and bad things that people have done wrong, and, some simple ways to fix those things.
Okay. So you can always, there's always, I've had this happen a bunch of times where a client comes in and goes, I just got a phone call from my local securities board or the Securities Exchange Commission or whomever, and they want to subpoena all my records. And, oh, by the way, I never gave my investors anything except they signed this one little piece of paper that says they're giving me money and I'll give it back to them. What do I do? And what we've traditionally done is we've asked that issuer or that person, well, how friendly are you with your investors right now? And if they're friendly with their investors at that point in time, we actually draft up the documents that they should have drafted up and ask them to go give them to their investors, have them read them, and have them sign off on them. Yeah. And that has helped a bunch of my clients get out of a lot of trouble in the past. So, if you find yourself in a situation where you go, hey, I might not be doing this quite right, yeah, you always have a chance to at least try and fix it. You should always try to do some kind of damage control. And people are welcome to call me. I do for a free 20 minutes. So if you really do feel like you're in a situation where you might be at risk, just give us a call and we'll take a look at what you're doing and how we can try to fix that for you.
Yeah, and I'll add your contact information below the video when we're all done here. So
excellent.
Tell me this, because it's an obvious question, do you help people in 50 states or?
Oh, all over the place. I have one client right now who owns property in England, but he lives in Hong Kong. Okay. So, and he's doing an offering here in the United States. Okay. So all over the world.
So the services you provide, though, that you could help somebody in any state.
Mm-hmm. Okay. Yeah.
I guess most of what you're dealing with is federal law more so than state law. Is that right?
It is, but you do have to worry about each individual state. And there are some states that are rougher than others. So if you live in the state of Arkansas or Kentucky, I feel bad for you because those states are a pain in the butt.
Okay. Okay. And typically, I guess the blue states are probably a little more challenging.
No, it's not necessarily that. It seems to me the more bored states.
Okay.
Like literally the more bored they are, the more time they have on their hands to go after things. I've had a couple of run-ins with the state of Texas, but they're more than reasonable. I mean, they truly, it seems to me that the state of Texas is truly looking for bad guys, is not interested in getting wrapped up in minutia.
Yeah.
But yeah, there's certain states that will actually read ask for your document, your offering document, and then read the entire thing. And to me, that's a sign of being bored.
Right. Right. Yeah. Now, how about, there's obviously some trends going on right now with crowdfunding, especially in the real estate space, and there's a fair bit of buzz about it. I mean, what do you think about that? What's going on, and what can we expect going forward?
Well, the crowdfunding rules are not completely fleshed out yet, but I'm looking forward to seeing that happen. I think crowdfunding, especially for this audience, Mike, is like a really great option, because if you haven't done your first deal yet, you can probably crowdfund your first deal relatively easily. Now, the only problem with doing crowdfunding is that you are limited it's a $10,000 cap per investor. Okay. So if you have a deal and you need $100,000 for that deal, that means you need at least 10 investors. Yeah. So that's a little harder to, swallow. And it's also limited to $1 million, which, for most flippers, that's not a problem. But like if you're doing a flip
that's per house. That's per house.
You can do it per house. Yeah.
I mean, you could raise more than $1 million for as long as it's multiple houses, or does it have to be a?
Yeah, you would have to redo it each time. So, for example, let's say you have a house at 123 Main Street, and then another house at 456 Cherry Lane. You would have to list on a crowdfunding portal that's been recognized by the Securities Exchange Commission, 123 Main Street and 456 Cherry Lane separately, and then raise money separately for them.
I see. Awesome. And I wish I had done some more research, and I need to, on crowdfunding. But are people are people doing just that? If they need, more than $1 million, are they starting multiple projects? And I guess said another way, because you kind of want to, the investors aren't getting first lien deed of trust, obviously, right?
No, well, not necessarily. It depends. You can really set it up however you would like. Now, if you need to raise more than $1 million, I suggest doing a private placement memorandum and really kind of hit the ground running there. And that's generally speaking what most of my clients do, is that they go out and they do a private placement memorandum.
Yeah.
But it runs the gamut. Where I would start is if you've never raised money before, start with crowdfunding, see if you have any success there. Then the second way to do it is to have what I call a disclosure document, and then you can offer a first deed of trust or a mortgage. So I would also take a look at that. And then the third thing you might want to look at is doing a private placement memorandum, where you just raise a bunch of money and go out and blast out as many properties as you would like. Yeah.
Do you help people at all with the crowdfunding stuff, or you just?
For sure. The only problem I see about crowdfunding, and this is a problem I see for the individual company or real estate entrepreneur, is that there is a lack of trust building in the crowdfunding portal. So sorry about that. There's a lack of trust building in the crowdfunding portal. So with that being said, it's hard to go out and ask a bunch of strangers, finance my deal, even though you don't even know me.
Right.
You don't know me at all, but I'm asking you on the internet to give me $10,000 or however much money. So, I think that's going to be, I think there's a fantasy amongst real estate entrepreneurs and entrepreneurs in general that crowdfunding is some kind of magic bullet.
Yeah.
And it's not. My most successful crowdfunding portal type companies are those that deal in the nonprofit sector. So there's another reason for the investor to invest, and it has nothing to do with the company or the returns or anything like that. As a matter of fact, if they never get their money back, in a lot of these cases, they don't really care. Yeah. So they're doing it for some kind of greater good, if you will.
I guess one other challenge is, one of the ways that I've been successful, and a lot of the folks that I work with are successful, is you have your funding lined up way before you've ever found a house. So if you have a house, a lot of investors, unfortunately, are not like that, which is why a lot of investors aren't successful, is they find a house and then they don't know what they're going to do. They're almost afraid to get a house because I can't stand behind what I said that I'm going to buy the house, which is why a lot of folks just assign properties. But But yeah, it's like chicken and an egg, right? So. Oh,
sure. And so what I recommend is that if it's always nicer to have the investors lined up first.
Yeah.
So if you have that time and the ability, and you don't have a property quite lined up, that's fine. Come up with a business plan and do it that way.
So do you see in all this money raising stuff, just kind of a general feel? I know you're a libertarian like I am. I saw that on your profile. So we won't, in case we have some other types of folks watching this show, I don't want to alienate anybody. But do you see the government getting more litigious in this space? Or do you see them getting a little more relaxed, maybe because of crowdfunding and things like that? Or where do you see kind of a macro trend?
I think what we see is that there was this outcry of the small business community who was trying to use a rule that was not used a lot, which was Rule 504. And then the SEC came barreling in and saying, you can't use that Rule 504 the way you're using it the wrong way. So all of these small entrepreneurs were basically halted from doing business because they couldn't raise money anymore. So there was this outcry from this community of small business owners or entrepreneurs or startup companies that said, we need this bill to be passed. And at that particular time, when the Jobs Act was being passed, Obama was really needed to look like a champion for small business because he was trying to, get healthcare passed and among other things. And not only that, what ended up also happening is a bunch of hedge funds threw money behind it, the bill. Because why? Because there's a bunch of things in there that benefit hedge funds and big firms like that. So the bill was introduced to Congress in January of 2012 and passed and was signed by the president in April 2012, which means it was a very short time that it got passed. But here we are in 2014, and the bill is still not fully vetted, and the rules are still not completely made by the SEC. And the reason is that is because the SEC doesn't particularly care for it. Yeah. And they're doing it almost under protest at this point.
Right.
So I think they're very nervous about it. They're very nervous about the prospect. And I didn't understand it at first until somebody explained it to me, somebody from Florida. They said, I don't know about California, but in Florida, we have a lot of scam artists.
Yeah.
And he said, I could see 5 guys getting together, each starting a crowdfunding platform, each trying to raise $1 million with the same plan or a similar plan. And then voila, they have $5 million and no accountability. Yeah. And they don't have to give it back, and the whole thing, and that's the end of that. So he could see a bunch. That's how the SEC is seeing it, and they believe that a bunch of bad apples are going to ruin it for the rest of us.
Yeah, I could see.
So
that
do
too,
I see them getting more litigious? I don't know. I mean, I'd be more worried, and I'm not trying to get political here. I'd be more worried about the IRS because they have so many agents now, and them looking at how you get money and how you give money back and where money's going and how it's getting reported. That to me would be my greater concern.
Yeah.
For people out there.
Okay. So what else do you do? What other from a law perspective, what other types of law do you help with? Or you primarily just focus on the raising money space?
This is all we do.
Yeah.
Nope, this is it. We help mostly real estate entrepreneurs. As a matter of fact, our website is syndicationlawyers.com. So, okay. I mean, it's all focused on raising money for the entrepreneur and how they raise money. And that can mean a variety of things. There's different ways to do it, but our primary focus is doing private placement memorandums.
Yeah. Okay.
So,
well, send me all those links and we'll add them all to the video. So, anything coming up here that are you coming to the expos this year, or are you going to be anywhere that people might see you at?
Yeah, no, I'm busy the weekend. I think the Dallas one is coming up. I'm busy that particular weekend, but where am I going to be? I'm doing a bunch of speaking engagements. Right now I'm lined up in California and Ohio. So if I come back out to Dallas, I'll let you all know. Absolutely.
And obviously there's, wherever you're going, let us know. We'll get you some friends to come meet with you.
Oh,
so,
thank you.
awesome.
That's very sweet.
Well, hey, this is an interesting topic, and there's not a lot of folks that I found that, know the nuts and bolts of what's going on. I was, the first time I heard you speak, I was impressed by everything you had to say, because there are definitely some folks that I've talked to this about and tend to get mixed misinformation on what to do and what not to do. So, awesome. Well, hey, thanks so much for joining us on the show today. Appreciate it.
Oh, you're very welcome. And if you guys need, I have a bunch of articles, free stuff. I'm not looking for anything. I like to just spread the word about what to do and what not to do, so that you don't have to call me after you get in trouble.
Yeah.
Let's try to avoid that. So if anybody needs anything out there, if I have an article I've already written on it, I'd be happy to give it to you. And if you want a free 20 minutes, I'm happy to give that to you as well.
I like free time from lawyers. I can't say I've gotten free time from a lawyer before, so that's awesome. Awesome.
Excellent.
Well, hey, have a great week. Thanks for joining us.
Thank you for having me. Bye, guys.
Take care. Are you a member of FlipNerd.com, the most robust real estate investing platform in existence, where you can find off-market wholesale deals and great vendors literally in your market? You can get access to advice from experts and learn about local clubs and events right in your backyard. If not, please visit FlipNerd.com and register for a free account. You can register in less than a minute. It's pretty much the coolest site that's ever existed in the real estate investing industry. So get on over to FlipNerd.com.